Hey, what's going on, everybody? It is Thursday, April 21st. So we had a big reversal in the market today. Started out good, started out strong, and then here we go. We had the comments from Powell talking about how the Fed is probably going to put through a 50 basis point rate hike in the May meeting. I was just wondering why that came as such a big surprise and triggered so much selling, because that's been priced in. I mean, I've been telling you guys about this. I mean, if you look at where Fed fund futures are and what they're pricing in as a probability for the next meeting, actually the next three meetings, we had 50 basis points already priced into the market. The only thing that changed today, I have to mention, is that the June meeting now, rather than a 50 basis point rate hike, which again is what's priced into Fed fund futures, is now a 75 basis point rate hike. I think there's a 64.2% probability of a 75 basis point rate hike at the June meeting. That's up. I mean, if you've been following my videos over the last few weeks, I've been mentioning the fact that the May meeting, the June meeting, the July meeting, they all had a 50 basis point hike priced in. But today, that June meeting popped up to a 75 basis point hike. At least that's in the probabilities. So that maybe that unnerved the market a little bit. But I mean, look, all this it comes back to the same thing. I mean, this is just, to me, this just insane focus on interest rates and monetary policy. I've said it so many times. I mean, it's madness. It's a psychosis. It's a mental illness. It's a form of mental illness. I mean, interest rate adjustments have very little impact. Sorry to say, especially in today's day and age when we're talking about really incremental changes in interest rates. You know, we're not talking about rates jumping from, like I've been saying, 4% to 20% back in the 1970s. You know, you're talking about interest rates moving up in fractional basis points, 25, 50, not even a full percent. And even if it is a full percent, I mean, you know, you're still near historically low levels in interest rates. And you want to see what really has an impact on the economy and people's incomes and all this stuff. I mean, take a look at fiscal. I mean, there's been no clearer of an example than what we saw during the pandemic with the iterations of fiscal stimulus that were passed, the different bills. You know, you saw personal savings go up to $6 trillion from literally nothing. You saw personal income just spike way up because of those transfers, those enormous, historic transfers from government to the non-government. I mean, that's what makes a difference. I mean, talking about these rate adjustments, and I tried to explain it to you for what it really is. They're really incremental price adjustments. So you're going from 25 basis points to whatever, 50, 75 basis points, incremental price adjustments. You're getting some income redistribution, all right, where savers, creditors are earning higher interest. It's a net transfer from the government to the economy through that interest channel. But again, we're not talking about massive amounts. I mean, I cannot believe nowadays, after all we have gone through of the past, since monetarism came about in the 70s, everything we have gone through, that this whole monetarist, psychosis, this monetarist mania has not been debunked by now. I mean, if anything, I have to say that it has gotten, the dogma, the mythology around this has gotten more intense than I have ever seen. And I've been in the markets for a long time, and I'm an economist by education. I mean, I just cannot believe that we haven't kind of, gotten off of this now after 40, 50 years of seeing, how small of an impact it has on the economy. And then particularly when you juxtapose monetary policy against what we saw like in a flash, like overnight, literally like overnight, with these massive fiscal supports that were provided, and how that it was like a fundamental change that happened, like that. And still here we are again talking about, oh, the Fed's going to do 50 basis points, and then everybody starts selling the market off. And I mean, it's just absolutely ridiculous. It's also it's frustrating on the one hand, but on the other hand, like I said, I'm looking forward to all this stuff. I can't wait until it finally, they put it in play. And I'm cynical right now. I don't think and if this thing turns out the way I believe it's going to turn out, where we'll roll out of this in a positive trend, because it's going to have very little effect, and the effect it will have, I think, will be a bullish effect for the reasons I just mentioned. The income transfer to the economy, and the reduction in reserve assets that's going to allow the banks to lend more. But my cynicism is based on the fact that it's not going to change anything in the belief structure. The belief structure is going to stay the same. They're just going to rationalize it somehow, like, oh, the Fed's not doing enough, or, yeah, because the Fed acted like this, then the market, took it as a bullish signal or a bullish sign. I don't know. I just like, it's not going to go away. It's one of these things that's just not going to go away. It's kind of like the same mythology of how we're going to pay for it, which never goes away, and it only applies to like social programs and national investment other than defense and military and war. Like, whenever it's defense and military and war, the money's always there. It's never asked, how are we going to pay for it? Even now, you look at the war situation, there's billions flowing to Ukraine. Billions. Meanwhile, if you can't pay your rent, if you don't have health insurance, if you lost your job and you're getting a pittance in unemployment insurance, if you can't afford to buy enough food because of inflation, if you can't afford to buy a home, if you can't send your kid to college, then like, fuck you, we don't have the money for that. But I mean, Ukraine, yeah, there's billions available all the time to send to Ukraine, no problem whatsoever. Almost on a daily basis, you see that happening. So we're in that same kind of a mindset when it comes to this monetary policy and monetarism and interest rates. No matter what happens with this, as we get into this policy switch by the Fed, and if it turns out that things are okay and the economy is fine, and it's not going to have this doom and gloom disastrous effect that everybody is predicting. And again, I've been in this field a long time. I have never seen a situation where everybody believes the same thing universally, and that thing comes to fruition. I mean, this is the definition of contrarian investing. I mean, now there is not a single person other than myself who is out there saying that these steps are going to have a bullish impact. Not for the reason, let's say, that somebody might suggest, because, hey, it'll finally be the Fed addressing inflation. No, if anything, higher interest rates, again, that just sets the general price level higher. It's not helping inflation. But for the other factors I mentioned, the reduction in reserve assets when the Fed starts reducing its balance sheet, for the income transfer when the rates go up, the government paying more interest into the economy, that stuff, that's not bearish. That is just not bearish. But believe me, there's going to be a completely different spin on all this. And because that's what happens every single time. Every single time. So today is kind of a disappointing day, but totally understandable, because this is the mindset, this is the mentality. Whenever the Fed comes on, or one of the Fed officials come on and they start talking about, hey, we got to jack up interest rates, it's going to be a knee-jerk reflex reaction. I was just surprised today because these rate hikes now are built in. I mean, they've been built in for a while. So the magnitude of the down move today, especially if you look at where we came off the top, off the highs, the magnitude of the down move, I thought was a complete overreaction. And I actually recommended that you buy the dip. I sent out an email to my subscribers that I think the thing to do today would be to buy the dip, because all this stuff is already priced in. Anyway, that's it for today. Remember, I'm the only one who has an applied approach to MMT. If you want to get a copy of my report, MMT Trader, there's now a individual subscription price rate on my website. Go to pitbulleconomics.com and sign up for a 30-day free trial. See you tomorrow. Bye.